Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at SELLAS Life Sciences.
If you find our talks useful, please consider subscribe, like, and comment underneath.
Right. Okay, so let's look at a situation that honestly just, it defies the normal laws of financial gravity.
It really does.
I mean, imagine a business that brings in absolutely zero commercial revenue, like not a single dollar from product sales.
Yeah, zero.
And if this were a traditional tech startup, the market would be incredibly skeptical, right? But in the clinical stage biopharmaceutical world, I mean, it's just Tuesday.
Exactly. It's par for the course.
Yet when you pull up the chart for this company, the stock is up over 250% since December 2025.
It's wild.
It is just this massive, violent upward trajectory.
And, the defining characteristic of this surge is that it isn't based on, like, a slow, methodical accumulation of market share.
Right.
Or, a steady earnings beat. This is explosive. It's event-driven market behavior.
The market is aggressively re-rating this asset because there is a monumental binary event looming just over the horizon.
A binary event.
Right. We are talking about a moment where the blinded data from a major clinical trial is finally going to be revealed to the world.
Wow. So for you listening, our mission today in our proprietary financial research is to really cut through the noise.
Yeah.
We are going to deconstruct the anatomy of this massive technical breakout, look under the hood at the precision medicine that is actually driving it, and help figure out why institutional capital—
Smart money.
Exactly, the so-called smart money. Why they are loading the boat on a company that hasn't even sold a single bottle of medicine yet.
It really is the classic biotech thriller setup, honestly.
Yeah.
Because to understand why a stock triples in a matter of months, you have to look at the immediate price action and the specific structural shift it represents.
Okay, break that down for us.
Well, institutional money doesn't just, wake up and decide to buy randomly. They wait for a signal.
Right, so let's talk about that signal, because this wasn't just some gradual drift upward. There was a specific trading session where SELLAS gapped up nearly 22% in a single day.
Yeah, 22%.
Which is a violent move. What exactly triggered that?
So the catalyst for that aggressive gap up was a highly specific piece of news from the Independent Data Monitoring Committee, or the IDMC.
Okay.
For those unfamiliar, the IDMC is an independent group of medical and statistical experts.
Right.
They are the only people who get to peek behind the curtain at the unblinded data while the Phase 3 REGAL trial is still ongoing.
Oh, wow.
Yeah, their sole mandate is to monitor safety and efficacy. So, like, if a drug is highly toxic, they step in and halt the trial immediately.
Makes sense.
Or if a drug is clearly doing absolutely nothing to help the patients, they just halt the trial for futility.
So they are essentially the safety net.
Exactly.
And if they don't say anything bad, the market just sort of assumes things are going well.
Well, it's actually even more definitive than that. Yeah, in this case, they didn't just stay silent. They issued a formal recommendation that the Phase 3 REGAL trial should continue without any modifications whatsoever.
Okay, so a total green light.
Right. When you have a late-stage trial of this magnitude, targeting a severe, highly lethal form of cancer, a green light to proceed without modification is just a massive validation.
I bet.
It tells the broader market that the trial hasn't tripped any futility boundaries. The drug is not failing.
I'm just picturing the chart when that news hit. You have this stock that was trading in this long, compressed, agonizing multi-year base.
Yeah, totally flat.
Completely ignored by the broader market. And then, bam, it gaps up 22% and proceeds to run 250% over the next few months.
Exactly.
It really feels like a pressure cooker that finally blew its lid.
That's a great way to put it.
But I do have to ask, when we see volume explode like this, is there a chance this is just retail hype?
Like meme stock stuff.
Yeah, exactly. Message boards catching fire, people chasing momentum. Or does the underlying tape suggest that institutions are quietly accumulating shares?
It's a fair question.
Yeah.
But the sheer volume and the structural nature of the shift strongly point to institutional accumulation.
Really?
Yeah. Retail traders can certainly spark a daily run or a short squeeze, but a sustained, methodical breakout from a multi-year basing pattern, that requires serious, heavy capital.
Right. A lot of money.
It requires institutions re-rating the fundamental value of the company ahead of a final data readout. They are placing their chips on the table before the final card is turned over.
Which I guess naturally brings us to the science, because
Yeah.
institutions aren't just buying a pretty stock chart.
No, definitely not.
They are buying the underlying asset. They're buying the moat. So what exactly is the medical moat here?
That moat is built entirely around precision medicine and these first-in-class mechanisms of action.
Okay.
They are targeting very high unmet need oncology populations where standard treatments have completely failed. So we have to look at their two primary assets, starting with their lead candidate, GPS.
Okay, GPS.
Yeah, GPS targets a highly specific protein called WT1.
WT1. You know, I've seen WT1 mentioned in our proprietary financial research before.
Yeah.
Why is it such a focal point?
Because the National Cancer Institute literally ranked WT1 as one of the top priority targets for cancer immunotherapy in the world.
Oh, wow. In the world?
Yes. It is a universal tumor antigen, meaning it's present across a remarkably wide array of tumor types.
Okay, so it's everywhere.
Right. So GPS is essentially a cancer vaccine. It's designed to train and trigger the patient's own immune system to recognize and actively destroy cancer cells that express this WT1 protein.
So GPS is the lead candidate in that massive phase 3 trial we just talked about.
Correct.
But looking at the clinical data flowing across the wires lately, it feels like their second asset is the one generating the truly jaw-dropping numbers.
Yes, absolutely.
Let's dig into SLS009.
SLS009 is fascinating. It's a small molecule CDK9 inhibitor. And the crucial takeaway here is that it is potentially the first and best-in-class drug in this specific category.
Why is that?
Well, historically, CDK9 inhibitors were incredibly toxic.
Ah, right.
But SLS009 is showing heavily reduced toxicity and significantly increased potency.
That's a good combo.
Exactly. But where it gets incredibly compelling for investors and the medical community is its application in acute myeloid leukemia, or AML.
We aren't just talking about a general AML diagnosis, right?
Right.
The research is specifically focused on patients who have relapsed or are refractory,
Right.
meaning every standard treatment they've tried has just stopped working.
Precisely. And it goes even deeper than that. We are talking about patients with highly unfavorable prognostic factors, specifically those harboring the ASXL1 and TP53 mutations.
ASXL1 and TP53.
Yeah. In the hematology world, these mutations are notorious. They are associated with a very grim prognosis and, crucially, complete resistance to the standard venetoclax-based regimens that doctors normally rely on.
So let me make sure I'm visualizing this correctly for you listening. Standard therapies, like venetoclax, try to block a survival protein.
Right.
But these specific mutations just bypass that blockade entirely.
Exactly.
So standard chemotherapy is basically like a battering ram trying to knock down the front door of the cancer cell.
That's a good analogy, yeah.
But the cancer has mutated. It has reinforced that door with solid iron. So the battering ram just bounces off.
That is exactly the dynamic. The cancer cell basically rewires its survival pathways to adapt to the brute force of the standard treatment.
So where does SLS009 come in then? Is it just like a bigger, heavier battering ram?
No, actually, it doesn't use the front door at all.
Oh.
As a highly potent CDK9 inhibitor, SLS009 targets the transcription process of the cancer cells.
Okay.
It sneaks around back and essentially turns off the cancer cell's ability to manufacture those iron reinforcements in the first place.
Oh.
It prevents the production of the short-lived survival proteins that these mutated leukemia cells desperately rely on.
So it starves them of their alternate survival mechanism.
Yes.
So it's not a battering ram, it's a lockpick.
A lockpick is the perfect analogy, and the clinical numbers backing up this lockpick mechanism are what's turning heads globally.
What are the numbers looking like?
They are seeing a 46% response rate in these relapsed or refractory patients with these unfavorable mutations.
I really want to pause here because it is so easy to get lost in all the clinical jargon and the response rate percentages.
Yeah, for sure.
Let's talk about the actual survival metric. What is the historical baseline for these specific patients when they fail standard therapies?
The historical benchmark median overall survival for this specific demographic is a mere 2.6 months.
2.6 months.
Yeah.
And what is the median overall survival they are reporting with SLS009?
8.9 months.
I really want that to sink in for a second. An increase from 2.6 months to 8.9 months.
It's huge.
We are talking about essentially tripling the median overall survival for a group of patients who historically had 0 options left.
Exactly 0.
Think about what an extra 6 months means to a terminal patient. That is an entire summer with their family. It's an extra holiday season.
Yeah.
It might be seeing a grandchild born. That is the very real human reality behind these clinical numbers.
Absolutely.
And it completely explains why the medical community and the financial markets are suddenly paying such close attention.
It is a profound paradigm shift in a disease state that has just frustrated oncologists for decades.
Yeah. Tripling a patient's survival time is an incredible medical victory. But, we both know that in the biotech sector, great science dies every day if the balance sheet cannot support it.
Unfortunate, but true.
Clinical trials burn through cash like jet fuel, finding patients globally, managing trial sites, processing data.
It's astronomically expensive.
Exactly. And as we established at the top of the show, SELLAS has zero revenue coming in.
Right.
So how are they keeping the lights on without completely burying themselves in debt?
Well, this is where the narrative shifts from a purely scientific breakthrough to a deeply compelling financial turnaround story.
Right.
If you look at their operational efficiency, management has tightened the belt significantly.
Yeah.
For the full year ended December 31st, 2025, their net loss actually narrowed by 13%.
That's pretty rare in biotech.
Very. It dropped from $30.9 million down to $26.9 million.
Is that just, standard corporate cost cutting, like firing a few executives? Or is there a structural reason for that drop?
It is entirely structural, and it's a very bullish indicator.
Yeah.
Their research and development expenses dropped from $19.1 million down to $16 million year over year.
Right.
And the reason for that drop is that they successfully completed the heavy, phenomenally expensive phase of patient enrollment for the phase 3 REGAL study in early 2024.
Ah, I see. So the heavy lifting of sourcing and onboarding terminal patients across multiple continents is just done.
Exactly.
Now they are just in the monitoring phase, waiting for the data to mature, which I assume costs a fraction of the price.
Right. They have officially transitioned from capital-intensive trial enrollment to data readout mode.
Got it.
But the real fortress they have built is on the balance sheet itself. As of December 31st, 2025, they were sitting on cash and cash equivalents of $71.8 million.
Which is solid enough for a microcap biotech, sure.
Mm-hmm.
But it doesn't exactly scream fortress.
True. But here is where it gets extraordinary.
Okay.
Subsequent to year-end, in the first quarter of 2026, they received an additional $42.6 million in cash.
Wow.
And crucially, this wasn't from a desperate, heavily discounted new public offering.
Right.
This cash came entirely from the exercise of previously outstanding warrants.
Oh, wow.
So when you add that up, their pro forma cash position right now is approximately $114.4 million.
Jeez.
Against total current liabilities of a mere $7 million.
Wait, let's just pause on warrants for a second so everyone listening is on the exact same page.
Sure.
A warrant is basically a VIP coupon. It gives these early institutional investors the option to buy shares from the company at a fixed price at some point in the future.
Exactly.
Now, if the underlying drug data looks terrible, they would just throw that coupon in the trash.
Right, they'd expire worthless.
But you are saying these stakeholders actually walked up to the register, slammed down over $42 million in cold, hard cash, and cash those coupons in right now.
That is exactly what happened.
Okay, I have to push back on this, though, because there is a massive elephant in the room regarding those warrants, and that's dilution.
Yeah.
To get all those warrants in play over the last year, the company had to issue a massive amount of stock. The outstanding share count essentially doubled, going from roughly 74 million to 153 million shares.
That's right.
Normally, doubling the share count absolutely terrifies retail investors. It crushes the stock price. So why are you framing this $42 million warrant exercise as a massive proxy for insider conviction rather than just a glaring red flag?
It's all because of the timing and the mechanism.
Okay.
Yes, the dilution occurred, and that is the bitter medicine every biotech investor has to swallow.
Sure.
But by converting those warrants right now, these large stakeholders have eliminated the future overhang on the stock. More importantly, look at their alternatives. They could have shorted the stock if they thought the trial would fail.
Right.
They could have just let the warrants expire. Instead, they proactively handed over $42 million for an equity position right before the most critical make-or-break data readout in the company's entire history.
So it's pure cash in the door validation.
Exactly. And it capitalizes the company so thoroughly that SELLAS now has the financial runway to execute all the way through potential FDA approval. They removed the immediate threat of needing to do a dilutive capital raise from a position of weakness. They truly fortressed the balance sheet.
All right, so they took the better medicine, the patient survived, and is now walking around with $114 million in the bank.
Right.
And a massive data readout weeks away. But let's take a breath and look at the existential risks.
Always important.
No biotech play is bulletproof, and we have to protect against irrational exuberance here in our research.
Yeah.
What is the fundamental bear case?
The primary bear case is what the industry calls binary clinical risk.
Right.
AML trials are notoriously volatile. It is a vicious, aggressive disease. And the massive risk here lies entirely in the phase 3 REGAL trial.
Okay.
Remember, the trial is currently blinded. Nobody knows the final numbers.
Right.
When that data is unblinded, if it fails to meet its primary endpoint of overall survival, the 250% momentum we've seen since December won't just slow down, it will be violently wiped out.
It really is a coin toss.
It is a binary event in the purest sense. Now, the mitigation for that fear is what we discussed earlier.
The IDMC.
Right. The IDMC's interim analysis recommending the trial continue without modification. That strongly implies a survival benefit is tracking positively.
That's a good sign.
And on top of that, the company mentioned that fewer than 50% of patients had deceased at a median follow-up of 13.5 months.
Oh, wow.
So the preliminary footprints in the snow look highly encouraging. But until the data is fully unblinded, the risk remains absolute.
And that binary risk is clearly reflected in how the quantitative models and Wall Street analysts are treating it.
Oh, definitely.
I was looking at our proprietary financial research, and a recent quantitative sentiment model actually gave this stock a hold rating.
A hold.
A hold. On a stock that is surging 250% with paradigm-shifting survival data, it feels like the ultimate Wall Street cover-your-behind move, doesn't it?
It absolutely is. Institutional analysts despise binary risk more than anything else in the market.
Right, because if the drug cures this mutated leukemia and the stock triples again, they can say, well, we didn't tell you to sell.
Exactly.
And if the trial fails completely and the stock craters, they can say, hey, we didn't tell you to buy. They're just terrified of flipping the coin.
It is a purely defensive posture. It acknowledges the immense positive momentum, but refuses to take professional responsibility for the unpredictable nature of a blinded clinical trial.
Yeah.
But here's the fascinating part. While the analysts sit comfortably on the fence, the institutional rumor mill is in absolute overdrive.
Because apex predators are always hunting.
Precisely. When you have a company demonstrating a 46% response rate in high-risk AML subtypes and holding a clean balance sheet with zero debt, they suddenly look very appetizing.
For sure.
SELLAS is emerging as a highly logical acquisition target. You have major global oncology players constantly looking to bolster their hematological portfolios.
Especially right now, as so many of their legacy blockbuster drugs are facing massive patent cliffs over the next few years. They need to replace that lost revenue.
Exactly. A company like SELLAS, with first-in-class mechanisms targeting these difficult mutations, is exactly the kind of strategic bolt-on acquisition these pharmaceutical giants look for to refill their pipelines. We're talking rumors about AbbVie, Bristol Myers Squibb, Novartis.
Wow. And we shouldn't ignore the European angle either, right?
No, definitely not. The Impact AML European collaboration is a massive piece of the puzzle.
Right.
While an outright buyout is always the dream scenario for retail investors, this European collaboration could very easily serve as a stepping stone to a lucrative regional licensing deal.
Oh, that makes sense.
Yeah. That would provide immediate, non-dilutive capital and instant commercial infrastructure abroad without having to build it all from scratch.
Okay, so let's tie all of these threads together for you listening.
Yeah.
We have the science, the financial fortress, and the risks. We need to lay out the concrete, actionable timeline. What exactly does the catalyst calendar look like for the next 3 to 6 months?
It is an incredibly densely packed calendar. First, we have an upcoming presentation on April 21st at the AACR.
The American Association for Cancer Research.
Right. They will be presenting crucial preclinical data for SLS009. This presentation will demonstrate its ability to induce apoptosis, which is programmed cell death, in AML cell lines harboring those high-risk ASXL1 and TP53 mutations.
Basically, a chance to show the global scientific community exactly how the lockpick works in real time.
Exactly. Then we move into Q2 2026, where we anticipate the enrollment of approximately 40 patients in Europe for the SLS009 combination therapy under that Impact AML collaboration.
And financially, we have Q1 2026 earnings expected around mid-May.
Right, and for that earnings call, the market's entire focus will be strictly on the cash burn rate.
Just the burn rate.
Yeah, analysts want to see that burn rate relative to that new $114 million pile, verifying that the incredible operational efficiency we saw in 2025 is actually holding steady.
But as vital as all of those are, they are really just the warm-up acts.
Yeah.
You have to talk about the ultimate macro catalyst, the singular reason the stock is up 250%.
The looming 80th event in the Phase 3 REGAL trial.
Let's explain this mechanic for everyone because event sounds so clinical.
Right.
The trial protocol requires a specific number of events to trigger the final analysis.
Right.
And in an oncology survival trial, an event usually means a patient passing away.
Yes.
It's a grim metric, but it is how the FDA demands statistical significance be achieved.
That is correct. They need exactly 80 events to trigger the formal database lock and unblinding.
Okay.
As of late December 2025, they had officially recorded 72 events.
So they are sitting just 8 events away from the finish line.
Yes.
And given the timeline from December to now, April 2026, that announcement could drop at literally any moment.
It is considered completely imminent. Once that 80th event is hit, management will lock the database, unblind the data, and we will finally see the true definitive efficacy of GPS.
Wow.
It is the single most significant near-term catalyst for a massive re-rating of the stock.
Bringing our proprietary investment thesis to a head, we are looking at an 8 out of 10 bullish score here.
Yeah.
We are framing this as a highly compelling, asymmetric risk-reward play for an event-driven 3 to 6 month hold. The balance sheet is fully fortressed. The precision medicine is showing unprecedented survival extensions in terminal demographics, and we are weeks, maybe even days, away from a binary Phase 3 readout.
The clinical risk is absolutely real, but the downside is heavily buffered by that massive cash position, while the upside of a positive Phase 3 readout in a terminal disease like AML is exponential.
Which leaves me with one final provocative thought for you to mull over as we wrap up today's analysis. We've established that the broader market and the analysts are currently paralyzed, terrified of pricing a clinical coin toss.
Totally paralyzed.
But remember those VIP coupons, the warrants. When the stakeholders holding those warrants are proactively pouring over $42 million of their own cash into the company right before the blinded trial results are revealed,
Right.
it begs the question, what do the insiders see in the preliminary data that the broader market hasn't priced in yet?